How are you, Dave? Welcome to Face.
I'm great. How are you guys doing today?
We're doing okay, Dave, for Monday morning. You had your adrenaline going a little bit, huh? With
That was absolutely insane. The first time I get interviewed on any, podcast or anything like that, I get a fire alarm. I have to drag the kids and the wife out of the, the home.
all
That's
right. Well, I
strange.
could tell you're a trader because you don't let anything stop you. Have you used Zoom before?
I have, yeah.
Okay, so you know how to share the screen, drop down menu with that green screen share.
Yes, sir. Let's do it.
So I went to your website. Nice web. Oh, there it is. Okay. So I went there, took a look at it, and before we get into, your business model and what you do at Moneyology, could you tell us a little bit about your journey and how you learned the business, if you had any mentors, your first, uh, experience in trading, just a little bit about how it went for you on the trail on your
Sure,
way to setting up Moneyology.
absolutely. I mean, it was a trail paved with a lot of pain, if you will. I started investing in the early 2000s and trading and investing, and I really picked up my first book on Warren Buffett, and that's kind of how I got my exposure to the markets. I got my CFA. I was really big on balance sheet analysis and so on. And I would buy stocks that had great balance sheets, and I would just wait and hope that they meet their intrinsic value, if you will, over time. And then what I realized pretty quickly is that waiting for stocks and hoping that they meet their intrinsic value without having any idea for trends around what's going on in the general markets is a recipe for disaster, especially if you're coming into 2008 and so on. So I quickly started following trend analysis. Was mentored by someone named Eric Mawade. I'm not sure if you guys are familiar with him, but anyway, his approach is basically price and momentum. How do they correlate with one another? Which one is leading? And I'm a big guy on behavioral finance. My professional background is I work with institutional. I'm an institutional money manager, and I realized that basically for most people it's just hope and pray investing. They just buy and wait for the long run, and hopefully have the patience and time and behavioral fortitude to be able to withstand kind of the volatility of the markets. But for me, I realize that trends really dominate investing, and if you can really understand what those trends are and how they operate, you can really make a lot of money. But I love education. I'm very passionate about teaching active investors kind of to avoid the pitfalls that I myself basically experienced over my 20 plus year journey. And so that's where Moneyology came about. It's not your typical trading blog or platform where people get advice. This is intended to be an education platform where I teach active investors to better understand their own portfolios, better understand their own psychology, and hopefully identify trends, contrarian trends, perhaps momentum trends that might last for 5, 10 years and really create a lot of long-lasting returns.
Okay, then, Dave, what's on your radar going into the election and what's been happening with COVID and the fact that we've recovered all the losses? I know personally I was surprised after the March, not well, the magnitude of the Fed March decline, I think surprised a lot of people, but the recovery I think was even more surprising. Not that it did recover, but that, as a trader, I was looking at, maybe we could recover some fib level before another wave down. And here we are, knocking on the door at new highs in S&P and NASDAQ, having made historic highs. Is this a mature trend or a trend that you see continuation in for like you said, looking for your long-term trends. Probably no indication of a trend change for you, right?
At this point, there's no indication of a trend change in the larger equity markets. I think the direction is up. Most folks think that things are going lower, and I definitely saw the earlier patterns on the VIX, and I see that as well. There's going to be a lot of volatility, but I think the longer term trends in the equity markets continue to be higher. I'm not one to chase at this point. There's just, as the gentleman said beforehand, the risk reward isn't there. But where I do see a lot of opportunities still certainly when we're looking at the equities is in the small cap space. Those are starting to outperform the large caps. Emerging markets are starting to outperform the U.S. domestic names. So that's very interesting. Underneath the surface, I'm seeing financials really starting to pick up. Dow Transport's really starting to show positive divergences, both in absolute and relative terms to the overall markets. But to me, that's not as interesting as kind of the larger term trends. Where sectors like uranium, for example, have been in downtrend since 2007, 2008, and are starting to break out of 12-year downtrends. And what that might mean for equities in that sector is pretty phenomenal. We've been on the precious metals kind of bandwagon since 2016 when the 6-year downtrend broke, and then kind of had that pullback, multi-year pullback, and then 2018 really took off again. So obviously we're seeing the fruits of that trend right now. So I mean, we've seen since March 5 and 10x returns in some of the names. And so what we try to do is we have watch lists of 300 plus names in this, for example, in the precious metal space. So the objective is to really identify the long-term trend, ideally a trend that's been in a downtrend for many, many years, and then find and use technical analysis to find some of the best names in the sector and basically ride them. And obviously have trailing stops over time, and let the markets dictate how long these trends do go. I do believe precious metals are setting up for a pretty nice correction, and so I tell all my subscribers to be cautious here. Don't necessarily sell the positions unless they fit long-term targets, but certainly have tight stops, because a pullback of 10% in the metal could mean a pullback of 30 to 50% in some of these positions. So
Yeah, you're
I
getting
think,
that market tell based upon last week's action where you had gold up $60 and GDX pretty much almost unchanged on the week, and Newmont the same thing, where the gold
yeah,
shares are lagging the physical. To me, that's a bit of a market tell that we could be due for a correction, because I was taught that the shares lead the way in a lot of different sectors, especially in miners.
yeah, absolutely. And this is a monthly chart, but just going into a weekly chart, I saw for quite some time there was a negative divergence where the juniors were underperforming the metal, and that's not a good sign anyway. And typically speaking, when I saw across the board 300 plus charts, with few exceptions, you had all the targets being hit, long-term targets, and so I just felt like a correction was happening. And then when you saw the metal, like you said, up 6-7%, and the juniors flat to negative, you knew that there was a point where there's going to be a pullback. The thing that I don't recommend doing, certainly in a bull market like this, is to ever go short. Certainly, unless you're a professional knowing exactly what you're doing, because you can really get killed in that space. So I don't short. I buy hedges on my positions using puts, and that's worked out well for me. But now, shorting is just not my style, and I think the general lesson that I try to teach my subscribers and the followers of Moneyology is: look, you have to know your personality. You have to know your time frame. You cannot just be a day trader if that doesn't fit your personality type. If you're a long-term investor, you have to invest long-term. You just have to hopefully identify trends and ride them if that's your style. But day trading is not for everybody, and certainly too many people, including me personally, you can really get burned doing that. So that's the key. I think really understanding psychology is the key to long-term investing success.
The psychology changing with the growthier names in NASDAQ. I've noticed some underperformance, a little bit of the inverse of what was happening during the acceleration phase to the upside in the market, that NASDAQ 100 is beginning, most days it would be up 2%, and the S&Ps would be up 1.25%. And in the last several weeks, S&Ps have a stronger looking chart, and they've been outperforming NASDAQ 100. Is there a message in that?
I think the message is there's a natural rebalancing occurring in underneath the surface of the markets. It's the many names in Nasdaq led primarily by technology and biotech. They've done incredibly well, and I mean to see a company like Apple go two x since the March lows, that's incredible. But underneath the surface, you're seeing a rebalancing, a rotation into the industrials, into the financials, into the small caps, because really as the economic numbers improve, those are the areas that are going to start benefiting from all the stimulus. Up until now, it's just been kind of the utility trade. The new utilities are the tech companies. But another trend I'm seeing, Dale, is interest rates are
I was
bottoming.
just going to ask you that. You're a mind
Yeah,
reader. Okay,
yeah,
so you know that it's a universal mantra, isn't it? Lower for longer, and I think it's going to be interrupted.
yeah, absolutely. I mean, I don't know if I'll have a chance to dive into that, but basically, we filmed a video just over the weekend here, where we showed that interest rates on the 10-year Treasury here. Let's see if I've got that. Basically, you have a bullish wedge here, that's being created, and you have positive divergence from the previous low back in March. And when you're seeing commodities, and I'm sorry, it's not, I don't know why it's not annotated right now, but you're seeing commodities all across the globe starting to rally. Agricultural commodities, obviously, we know about precious metals, energy starting to pick up again. And you're seeing financials benefit, right? That's the margin compression that they've been facing certainly since March may kind of alleviate a little bit. So interest
Yeah,
rates, I could see the 10-year Treasury rally to 1.2 to 1.5 over the next 6 to 12 months. And if that
yeah.
happens, I'm still long term. I still think long term we're going to zero. But if that happens, then you're going to see a lot of changes in the underlying kind of infrastructure of the market. Also, um, also inflation. Long-term inflation is breaking out against deflationary trends, and that's very unique. And this happened in January. If you map out a 20-year chart of inflation against deflation, something happened in January where inflation started to break out, and that's a trend that's going to take place for many years. And so for me and for my clients, both personally here with Moneyology and professionally, that's a trend that I'm following very closely.
Okay, so you mentioned grains. Do you participate with ETFs looking at, you know, grains and softs and other commodity sectors where, or do you look for individual shares that are part of that, say, agricultural industry?
Yeah,
How do you
I
trade it?
haven't, yeah, I haven't yet gotten into the futures markets, and that's something I plan on moving into over the next decade. That's an area I'm starting to study right now. So futures on grains, I haven't really traded, even though there's an opportunity there. And really the underlying companies, there aren't too many of them. So for me, fundamentally, I'm still a Warren Buffett guy. You know, I still
Okay.
try to find the best companies and sectors, in bullish sectors. So I haven't dove into that space as much as I'd like to. But I mean, look, when you're talking about agriculture, most likely, potash and various different, agricultural stocks. That's an area that I'm going to be looking into more and more over the next couple of months.
Do you have a uranium chart you could share with us? Because I know
Absolutely,
you're very, you know, that's a big part of, and you know,
absolutely.
a lot of people were on this fairly early. So do you think that, say, for example, Biden gets elected, and you know, part of the stimulus that he's proposing would be a move towards green energy. Is nuclear energy going to be part of that combination? And that's why uranium is performing the way it is. So it got killed in March too, and has fought its way back. Okay.
Yeah. Yeah, it's hard to say with Biden and the Democrats. I mean, now they're coming around to the uranium idea as part of the green energy solution, which is fantastic. I think around the world, even the more liberal politicians have come around to the idea that nuclear is a very good force for the green agenda that they have, if you will. But I think in the U.S. it's a bipartisan issue at this point. But globally, the demand for nuclear is skyrocketing, and you're coming. you're at the tail end of a 12-year cycle where you have the combination of Fukushima and the global financial crisis, and the amount of underinvestment in the sector that's already so small is spectacular. So the supply and demand numbers are coming together in a way that's probably more attractive than any other uh, sector in the entire market. And I follow, again, both the technicals and the fundamentals of the global markets. I mean, the trade here is fantastic. If you look back in 2000 and in the first part of this century and millennia, uranium went from anywhere from $10 to about 150, and you had some companies go from 10 cents to $10. You had 500 companies in the space. Now you're looking at a sector that across the globe, certainly in the US, there are about 10 to 15 names. I mean, it's an incredible consolidation that's taken place. So if you
How
do
many companies now from 500?
about 10 to 15 in the US, I mean, if you look at my watch
Wow.
list here, I'll just dive into that right
It was
real.
like the Baton Death March.
Yeah, and so the names that have survived. Okay, so it might be a little bit more than 10 here, but the names that have survived are you can count them on a couple hands here. So they have some of the best management teams. I think the ones that have survived, and if you do your due diligence, there is some life-changing opportunities here. So with regard to the chart of uranium, here's the one that I showed. The URA is not a pure play ETF at this point, but it still shows kind of what's taking place in the sector. And this is since 2015. If you extend this back all the way to 2008, you can see a general trend. But basically, we've been in this consolidation here all the way down, and we finally broke that. Obviously, had this fake breakdown in March. I think everything broke down. But once that recovered, now you're starting to see an uptrend take place, and you're seeing it
Should hold
across.
$10 then, right? On any pullback.
Exactly. Exactly. So it needs to hold this level. Obviously, if it doesn't hold this level, then that entire narrative is out the window. But right now, it's a very exciting time in the space because still opportunities are trading at 99 cents off their highs. So pennies on the dollar.
Okay, interesting, because a lot of people don't talk about it. Interesting. Anything else that's on your radar you'd like to share with us today?
I think in general, right now I'm just really focused on commodities and, like I said,
Okay.
precious metals and uranium. Energy and natural gas is actually starting to pick
Yeah.
up. Natural gas, similar to uranium, is one of those green plays that's been absolutely hit with oversupply over the last couple of years. And
Yeah.
while I don't have a chart in front of me here, it's really
It kind of
starting to
came out of
break
the
down.
hole last week, I think, or the week
Yeah,
before, right?
yeah, absolutely. So I'm looking to see an established uptrend. Natural gas, where it actually trades very interestingly similar to the VIX, where it just gets consolidated over time. It goes into a wedge and then it pops, and then everyone thinks we have a new uptrend, and then it drops again. So I want to wait a little bit for confirmation on that. But there are some names in the sector. Sandridge Energy comes to mind that have were multi-billion-dollar companies and then we're on the verge of bankruptcy. And so if you can catch that trend right before it reverses and do some due diligence and some good names, and that's what we want to do with our charts and we do through our videos, that is what you want to do. We've been long solar for quite some time. So that's a trend that right now I wouldn't chase at this point, but that's been a really nice trend over the last couple of years. And just in general, clean energy. We had wind technology, water technology, all those sectors have been kind of exploding high over the last 3 years or so. So I think that those trends are coming to an end. Now they're becoming kind of more conservative investments, but the long-term money has already been made in a lot of those sectors. But in uranium and copper and a lot of these clean energy commodities, I think that's where you're going to see an explosion of volume over the next couple of years.
Okay. Is silver part of that clean energy revolution because it's used in solar panels and or for anything else?
Absolutely. I mean, I don't think that silver is trading right now based on that revolution, but certainly the demand in silver is going to continue to go up as that revolution comes to fruition. So, when I'm thinking of that revolution, I'm thinking of cobalt, I'm thinking of nickel, uh, palladium. Obviously, was in that camp. I think platinum's going to come into that camp, and silver plays a big role. I just don't know how much of that sentiment is created by that kind of the fundamental demand. I think right now it's all about the precious metals craze that's going on.
Okay, and do you have any kind of view on where you think WTI, did it having it go negative, did that surprise you? I never thought I'd see a futures contract go negative.
Yeah, it's been incredible to see that. It's interesting. I have a similar view to the gentleman, and I'm sorry I missed his name because I was outside.
Steve, that was
Steve.
Mr. Volge, yes.
There you go. He was very good. I really enjoyed his. In terms of crude, I have a similar view that I think short term there might be a fake breakout because it's a bit long in the tooth. But longer term, I do think that we're going to see higher prices closer to 62 to possibly as high as 77. I think longer term we're probably going to be in a very nice bull run. I'm not sure we're there yet. This particular chart is, I wouldn't chase it at this point. We filled this gap here at
Yeah,
42,
yeah,
and at this point I want to see what the market tells me. Is it going to pull back to 32.50, possibly a bit lower, or is it going to break out towards 62.50? It can go either way. I'm watching the underlying equities very closely. We just did a video on about 30 top momentum names in the sector because I think in general the rule is the companies lead the price, and
right.
so
It is.
the
Yeah,
whereas I feel like the actual commodity is a little bit long in the tooth. When I look at some of the companies, their stocks are just starting to break out. And so
interesting.
if they start leading, then I think we're going to see a breakout here. And hopefully it's not a fake breakout because I've seen those before. Certainly in the
Yeah,
shipping space over the last 12 months, there have been a lot of fake breakouts. But we'll see. I mean, that's the beauty of following the charts. It gives you probabilities. It doesn't give you certainties, and you have to trade on those probabilities.
you doing anything in kryptonite?
I follow it, but I don't trade it. I see breakouts there,
Is there really kryptonite?
in the crypto space.
The kryptonite.
No, no, I'm
That's
sorry.
what yeah, Superman had to
Gotcha.
stay
Okay,
away
fair
from.
enough. Yeah, it's still
All
way
right.
too early for me here.
I've been waiting for 20 minutes to use that on you.
There you
Anyway,
go.
so, all right, so you have a view on cryptos?
Cryptos, I'm not strong on it in terms of an investment thesis, but
Yeah.
from a charting perspective, Bitcoin, Ethereum, they're looking really good long term right now.
Yeah.
And I just, unless there's
I
a
can't
fundamental,
wrap my head around it either.
exactly, I want to be able
That's
to fundamentally understand why I'm investing in something, even though I'm
yeah.
I'm buying and selling based on technicals.
Okay. Well, really pleasure meeting you, Dave. And I've interviewed, you know, probably close to 1,000 traders over the years. And when you've done that, you could tell um, when somebody knows that you know that they know. And I'm glad that we had a chance to talk, and people could follow you on Twitter at Moneyology, and that's also your website name, www.money. Am I pronouncing it right?
Yeah,
Moneyology.com.
Moneyology.com, and thank you very much, Dale. I think just final words. There's a lot of premium content, but I am doing my best to create as much free content on the site. I really highly recommend folks checking out this fundamental zone. What I've done here is I put together through the St. Louis Federal Reserve charts, live data stream of some of the top fundamental
Nice.
charts in the sector. So if you click on something like this, industrial production, you'll get a pop-up that gives you literally a live feed to the Federal Reserve. So
Boy, is that an
I,
ugly chair.
yeah, I am a fundamental. Well, these charts are typically updated through end of Q1, so obviously
Yeah.
we know what happened there. But I am a technicals guy, but fundamentals still matter, and I think these are very valuable when you're looking at some of you know the volatility that we might experience over the next 12 to 24 months. So anyway, best of luck, and I really appreciate
Yep.
the time, and
Oh,
have a great week.
okay, Dave, you're now my trading warrior brother. You survived an interview with Dale Pinkert. So
Awesome. All right,
thanks
thanks
a
a lot,
lot for
buddy.
edifying F.A.C.E today, Dave. I appreciate it.
You got
We
it.
all do.
Take care. Bye.
All right, everyone. That's a wrap. Check out Uranium. All right, everyone. Have a great rest of the trading day. We'll see you for turnaround Tuesday. Good hunting the rest of the day. Adios. You're very welcome, everyone. See you, Dave.